These are questions from my agents.
Okay.
So I put out a message to them and said, "Hey, I want your questions. What do you want to know?"
Okay.
Will the housing market crash?
No. And I get that question a lot. The difference between now and 2008, for anyone that wasn't around that, is we're not making bad transactions. We're not making loans to people that can't afford them. We're not stretching the limits of what people can qualify for. If anything, we're being more conservative. The last recession everybody can remember is from housing. So everyone wants to kind of point the finger at our industry. But the truth of the matter is this came from inflation. It came from not knowing really how to handle COVID from an economic policy standpoint. We printed way too much money. We made things way too cheap. And anytime you make goods cheap and flood the market with money, inflation's going to happen, right? So we're kind of, eating crow on the policies a little bit right now, but it's expected and it's something that has to happen, but it's not going to be anything near 2008. I think it'll be violent and quick. It won't be a 4 or 5 year recovery like it was last time. I think it'll be 18 to 24 months. But unfortunately, it has to happen in order for everything to level out.
To restart.
Yeah, a little
Restart
bit.
the market. Will interest make it to 8% or above?
We will know that in July. So that's a great question. So 2 things are driving the interest rate conversation right now. One is the CPI, Consumer Price Index, right? That's what drives inflation. So the last 2 or 3 times we've gotten that report, we've gone up incremental amounts, but we're still not curbing inflation, which is what the Fed is trying to do through raising the interest rates. You make things more expensive, people spend less money, inflation comes down because there's more supply and less demand, right? The next time that we meet is in July, right? The Fed meets in July, a few days after they get the Consumer Price Index. It's that way by design right now. They're going to meet every month right after we get that report. That data is a little behind. You and I can feel that things are changing. I don't know if it's going to show up on that report yet. So if that report doesn't show a decline from 8.6%, they're going to act aggressively. If they act aggressively, I think we could see them go from 6s, which is where we're kind of planted right now, above 7. Next month could do the same thing. I think we could see, unless inflation starts to come down, you can expect that those are going to be big events that happen every month.
So do you think every time they meet that they'll do a 0.75 increase every time, or do you think that they'll get more aggressive and start doing a 1%?
Well, it really just depends on if you believe what they're telling us, right? They have a good job of speaking out of both sides of their mouth, where they say, we're going to be extremely aggressive. However, if the market dictates, we will be less aggressive. So the playbook that they've given us right now is until they get to 2%, they're going to continue to be aggressive.
Gotcha.
Right? I don't think we're going to be at 2% on this next meeting. So maybe they don't, if we go to 6 or 5% inflation, that'd be great, right? They might only increase it 1/4 or 3/8. That's good news, as long as it continues to go down. I think we're already starting to see it. You're starting to see some layoffs. You're starting to see lumber prices, steel prices kind of coming back to the consumer. They're not as expensive as they were a year ago, but I think we got a little bit of room to go.
Yeah, we've started seeing, even on the real estate side, we've already started seeing builders reductions.
Sure.
on models and just their inventory. So
it's funny how quick they remember that you guys exist and they want to pay your commission.
Right now they're calling us.
Don't forget those things.
Oh, I know.
Okay, it's important.
They're calling us saying, "Hey, we have inventory.
Hey,
bring your
BTSAs.
clients." Yeah.
Exactly.
The good old days.
Yeah.
What would you see as a normal interest rate for now and the future?
Okay, so right now we're in the 6s, right? Wherever those meetings go, we're going to have adjustments. I have a saying that there's a rule of 4, and if you can get these 3 levers of the economy at the same 4%, it works, right? If you can have rates in the 4s, unemployment in the 4s, and appreciation in the 4s, it just works. We ran like that from 2010 to 2019, and it was pretty stable. We knew what to expect. We knew what rates would be. If you didn't lock your rate in Friday, Monday was fine. We don't live in that world right now. COVID threw some curveballs. You can't expect economists to know exactly how to fix it. I think they did what they thought was right. I think that politically they kept putting money out that they shouldn't, in places that they shouldn't, and now we're kind of like paying the price for that. But if we can get rebalanced to that kind of that 4, 4, and 4, it's really silly, but in management or leadership, if you can take a step back and find 3 or 4 things, like if this is right, and this is right, pretty much everything else is rolling, right? Absolutely. So if we can get back to that, I think it's years, and I think on the other side of this, we'll have years of stability that we can account to. I think rates settle in that mid-4s range once this is all over.
Eventually.
I think 4.5 is a good driving rate for the economy. Now, could they get higher? Yes. The reason that I think there would be restrictions to that is because how much more things cost now. Where houses aren't $120,000 anymore, so we can't really charge people 12%. They just won't pay it.
Right. Well, I remember back in 98 when I bought my first house, my interest rate was 9% on an ARM.
Yeah.
Which was good then.
Sure.
And even when I got into real estate 18 years ago, average rates were, if you got a 5, then you had excellent credit.
Yeah.
If you got a 6, you were average. Now, if you got a 7, that's when you were, a 580 or below.
Sure.
So, I remember those days. What are the benefits to buying versus now versus later?
You always buy now. I'll explain to you why. When rates are high, markets might level, but again, this isn't a toxic asset, toxic loan recession, okay? This is an inflationary recession. It's a completely different ballgame, right? Economics 101, they're 2 different things. So you might see, when you start seeing price reductions right now, it's because the seller has to come back to earth. It's not that the housing market's crashing, it's that we are no longer in a name your price market. Now we're in a what are the comps support market, right? So we got to get back to that, which is normal real estate 101.
Right.
But you still have to go all the way through the seller paid closing cost and all this stuff before you get into a true buyer's market. That takes years. Even though inventory is expanding, right? We're starting to see more inventory. It's still going to take a while. What do you think is going to happen to prices when the rates go back down?
Prices
They're going to go right back up. So I can fix your rate 2 years from now. I cannot go back in time to today.
Fix that price.
And buy the house for what it's worth right now. You just can't do it.
Yep.
Real estate's always a good bet.
I had a good friend of mine post yesterday, marry the house, date the rate.
100%. And we've been talking about that for 2 or 3 weeks. You can always fix your loan. You cannot fix the price you paid for the house.
Absolutely.
It's just not possible.
What are the benefits of buying down your rate?
So there's 2 different ways to buy down your rate. One is the customary, just regular, permanent buy down. We're advising people against that right now. And let me tell you why. Let's say you have a $400,000 loan, right? And it's going to cost you 1% to move your rate from 6 to maybe 5.65. You're going to save about $100, okay? You're going to pay about $6,000 to do that. So what's your break even 5 years from now? Guess what? In less than 5 years, rates are going to be back in the 4s. You'll never recover that money, ever. So don't do it. Don't spend money you're not going to get back. It doesn't make sense. The thing I love about math is it doesn't lie, right? The numbers are the numbers. So you're never going to get that money back. Do not do permanent buy downs right now. If anything, ask the seller to participate in a temporary buy down. Now this is something that not everybody has, but a temporary buy down works like this. Let's say you qualify for a 6.25 rate, okay? If you ask the seller for a temporary buy down, okay, let's say a 2-1, which means 2% the first year, 1% the second year. I ran a scenario for a realtor at $400,000. It would cost, instead of doing a price reduction of 10 grand, it was going to cost their seller about $9,000 to participate in the buy down. The buyer got a $550 lower payment year 1, a $270 lower payment year 2, and then year 3 they start paying their actual rate. We think this whole economic event's over 2 years. So we're coming right behind them refinancing in that hopefully mid-4 rate. So if you want to be the most attractive house on the block, make it more affordable. Lowering your price $10,000 is only going to save them $70. That doesn't move the needle. But if you can save someone $500 for the first year, now I'm listening. So this is a very old solution to a very new product. But we're helping everybody. We're matching buyers with the correct home, and we're helping sellers move their homes without potentially using the wrong strategy. A reduction right now isn't the first thing we should be thinking about because it doesn't save the buyers a ton of money. If we can temporarily buy down that rate for the next 48 months or 24 months, it's going to significantly help them in their pocketbook way more than a price reduction.
Can't wait to do one of those with you. What is the cost of buying down an interest rate? All right, you touched on this a minute ago, but what is the cost of buying down the interest rate?
So on a permanent buy down, it's costing about 1% to move your rate about 3/8. Okay, so 1% is 1% of your loan amount. So if you're borrowing $400,000, that's going to be a $4,000 charge, and it's going to lower your rate about 3/8%. So if you were qualified for a 6.25, that $4,000 is only going to move it to 5,875, which is still going to put you in a rate that's in jeopardy of needing to be refinanced within 2 years. So the $4,000, you'll never make the $4,000 back unless you make yourself stay in that loan for 40 months, which none of us think is going to be the advisable thing to do. Because think about it this way, think about the other side. What if I'm completely wrong? What if every economist is completely wrong and it goes the other way? You still have a 6.25, you don't have an 8, you don't have a 9, you still have a better rate. Why spend the money? Especially with everything going on right now, keep your cash in your pocket as much as you can.
Cash is king.
Cash is king. Don't put money into your rate right now. It doesn't make sense. It doesn't make sense. Temporary buy downs make sense because it affects your pocketbook on a large scale. But paying $4,000 to move your rate 3/8 and still have a high 5 doesn't make any sense right now. This is not the market to do that in. When rates are at 2.5 and you want to pay to get it at 2.25, that's fine. You're never refinancing that rate.
Ever.
You know what I mean? Not happening. I mean, the world has to be falling apart and you need access to your equity to redo that loan. That's okay to buy that down. But to buy down something that you're going to redo doesn't make any sense. So we're advising everybody against it.
Good to know. So what is your interest rate today?
That's a really hard question because I'll tell you the way the interest rates are advertised today. How about that?
Okay.
So if you go online, Chase, Bank of America, Wells Fargo, they all do the same thing, right? 25% down, perfect credit, paying 1%. Okay? That's the formula that they use. So when you see that rate from Bank of America, Wells, or Chase, which today is probably 6.125, okay? When you see that rate, just know that they're calculating someone putting 25% down, having perfect credit, and paying 1% in closing cost extra to reduce their rate, which we're advising against. So if you're putting 3% down or 5% down, and you don't have perfect credit, and you're not paying that, that isn't your rate. But that is the standard by which everybody has advertised their interest rates, right? So we have to educate people on that because they'll say, oh, you're a quarter off of Bank of America or you're a quarter off of Wells Fargo. Well, really, we're not. The difference is they're building in this perfect scenario in which you don't fit into, right? Because I wouldn't put 25% down right now. That's my personal opinion.
And that's only if you qualify for that term.
100%.
If you are someone that may not have perfect credit, maybe you're in the mid 600s, you're probably not going to get that rate. You're probably going to get a little bit higher rate.
Sure.
And how is it with someone that may have a 580 credit score, what's their buying potential right now?
So their buying potential is in the 580 to 660 category. Cash is king. If you have cash, we can bring you to the table because FHA, their rates are maxing out at about 6.25 right now anyway. You could still do temp buy down if you wanted to, the temporary buy down. It's really just can you pay the cost to get the 6.25, because we don't have the ability to go higher. On conventional, we have rates open all the way to 7.65 right now. And to go back to what you were talking about earlier, if you're an investor or if you're buying a second home and you're not putting 35% down, that advertised rate is not for you. Fannie Mae and Freddie Mac made some changes on April 1st where it's a lot harder to buy an investment home or a second home unless you're putting a considerable amount of money down. So those interest rates are not for you. The costs are higher, the rates are higher, everything is higher when you're buying a second home or an investment property right now using traditional financing.
So do you think that those guidelines will come and change with Fannie Mae and Freddie Mac eventually on investments in secondary homes?
Sure. So when you think about what they serve to do, Fannie Mae and Freddie Mac, they're the largest servicer of loans in the United States, right? Those two companies. Mm-hmm. So if we have an inventory problem, right? We go the other way. We have too much inventory. They'll open it back up because that's an easy way to solve the problem. Let people buy second homes, let people buy investment homes with similar rates. Then you will eliminate the inventory problem. Right now, we don't need to. Right now, inventory is still on its way back to where it needs to be. We don't have months of inventory right now. If we had 4 months, if we had 8 months of inventory, they might change that. But it's going to take getting to that point. So that's one of those things where they have all the levers and they know when to pull them. They pulled those back because your first-time home buyers could buy a home because people with the money were buying everything. The rates were too low for an investment property.
So I'm going to go back to COVID for a second.
Sure.
During COVID, there were so many homeowners that were put in a position whether they lost their home, their hours were reduced, or whatever it may be, and they were offered forbearance through their mortgage company. We are starting to see some of those forbearance not get paid, and they're getting notices of foreclosure. What can a homeowner do to not lose their home?
Okay. So one, I'm going to backtrack first, and we're going to talk about how bad this could have been. Because the amount of people that took forbearance, maybe not knowing what it was almost 12-15% at one point of all mortgages took a forbearance agreement. In the beginning, we did not know what the repercussions of that would be, because the way that works is you forego the payments now and then they're due at a later time. Where we got lucky, and I call it kind of the largest great escape of the real estate industry ever, is we didn't know we were going to have runaway appreciation. So most of the people that could still pay, they were able to redo their loans using the new equity that they received during the time of COVID. Had we not had appreciation at the level that we had, we could have been looking at 6 to 9% foreclosure. And really, just by luck, we avoided that. Okay? So that's number one. So now we're at a 1% or less default rate, which is the standard default rate, even when you're doing normal lending. What they can do, or try to do, is work out a loan modification with their current mortgage company. It's not an easy process. It's costly, but it is better than a foreclosure. And generally speaking, they're trying to work on terms that will allow for them to be able to make the payments. It's expensive, especially in Texas where we live. It's extremely expensive to foreclose, and it's even more expensive to bring those homes back to market. So it's in the best interest of them to work with the buyer, but they still have to be able to qualify it some way. So we're going to have some foreclosures come. But for the ones that get the notice, the first thing you do is call your servicer and ask them if there's any way that we can modify the loan. Chances are they have enough equity to do so. So as long as they can qualify for that modified loan, they should have a way out.
Good to know. We're still seeing we're still seeing buyers lose out on contracts.
Okay.
What can a buyer do on the loan side, especially with an FHA or even a VA mostly, but what can they do to strengthen their offers? What do you think?
I'll start with VA because I'm very passionate about this.
I do.
And the very first thing is we need to educate listing agents and sellers that they already paid their down payment. Okay? They wrote a blank check to the United States of America, so they deserve to own a home. That's number one. Okay, we have to get that educated and out into the market. Number one, and we try to do that every year. Number two, there are options out there. You can do more of your approval up front so that you can take away some of your financing contingency. We have programs where we can get you completely clear to close other than the property. So when you make your offer, there's no financing contingency, it's just the appraisal. The VA is making, there's actually a bill that's sponsored by a senator and a House of Representatives, different chambers. They're co-sponsoring this bill to try to modify the VA appraisal process to where they could allow some drive-by and even allow appraisal waivers. That's the only slow part of the VA home process is the appraisal. If we can fix that part and less transactions, it's going to speed that up. We're already starting to get them back a little sooner. But if we can speed that process up, I think that goes a long way. But it's all about educating people. We also have cash backup guarantees, right? So if they don't close, we'll pay for cash for the house. We have that in-house. And then you have other companies out there, Ribbon and a few others that offer that as well, so that you can write a cash offer and then use the financing. It's very clear up front, like, hey, we're going to try to use financing, but if not, you'll get cash for the house. So those are some things that I've seen them do in the market. The last maybe 60 days, they haven't needed it as much, but I don't think those tools are going to go away. I think competing with cash, the thing about if rates keep going up is cash buyers don't care what the rate is. They have a better advantage. So as long as we continue to be a transient community where people are coming from out of state, it's going to be a competition factor that we have to have an answer for. And I think that the cash backup offers is a good one. Taking care of a lot of the financing up front so you can do zero financing contingency is another aggressive way. You get a financed offer and maybe you have this this is Texas. People still like being a Texan. And if you've got an out-of-state person or you've got a veteran that's put in the work and doesn't have a financing contingency, I like the veteran's chance in the state of Texas. I really do. We just have to be able to relay that information in a way to where it gets all the way to the sellers. So I would say listing agents, get as much information as you can and take it all the way to your sellers. Let them make that choice. Don't take any, don't sort the stack in a certain way if the information could be better for the VA buyer. That's what I think.
All right. I don't have any other questions.
Okay. Well then, I would like to ask you a question.
Okay.
Yeah. And we'll just have a conversation. So one of the things I would like to know, and this is a conversation I'm going to ask everybody that comes in here, is as a person in leadership, right? Most of us start in production, and then something happens. There's a moment where we decide, like, no, I need to do this Robbie Nelson's way, or in a different way. So what was that moment? You're selling real estate. You don't have to give names. We don't have to do brands, any of that stuff. But you're somewhere that you're not now. You're working for someone which you're not now, and then something happens. What was that moment that you decided, nope, I got to do this. I got to do this on my own?
I think that so I had two moments.
Okay. So
my first moment was I was trying to grow.
Okay.
I wanted an assistant. I wanted to potentially grow a team. And I really didn't know how to do that. And so I started asking questions. And then where I was at wasn't where I needed to be. Mm-hmm. And
Was it large? Was there a lot of people?
No, it was
Okay.
small. It was. I mean, it was a small brokerage, but I needed. I knew I needed more. You know, I was in a position that, you know, I mean, closing at least one deal a week, and I was doing everything on my own. I didn't have an assistant. I didn't have a transaction coordinator. We didn't even have transaction coordinators 18 years ago. And so I just felt that for me, I had to make a move and go somewhere else where I could say, okay, this is how I'm gonna start moving forward and growing. I made that move, and I quickly realized I need to get my broker's license.
Yeah.
So 7 months of hard work and a lot of hours. I finally did that and went independent. Started out with one assistant. I still only have one assistant, but now we've grown to, we're still a small brokerage. We have 15 agents. We have one assistant that she kind of handles all of us. And I mean, we're growing. We're going to build a new office and potentially grow our agents and more teams. And so
would you say that where there were holes in the place that you left, those are the first things that you filled? Like, we're gonna do X, Y, Z, because we didn't have that where I was before.
Absolutely.
Yeah.
And nobody tells you when you're doing your classes and you're just, you know, in the grind of everything, nobody tells you, oh, hey, this is your first step and then this is your second step. Now your coaches, you know, if you're in a coaching program, they're going to tell you your first hire as an assistant on day one of you getting your license. Well, most people who are day one getting their license can't afford to have an assistant. So you try to find a brokerage that will offer an assistant, whether it be transaction coordinating or, you know, just a general admin.
Sure.
So those are the brokerages you need to look for, especially if you're just starting out.
Yeah. And that's a good point, because I think there's a lot, it's a different perspective in what you need day one of coming into the real estate industry versus what you need year 2, year 5, year 10. So I'll tell you the same story for me. Okay. So I have 2 also. So the first one is worked for a lot of companies, some good, some bad. Always boiled down to how good was the manager. Always, right? Had some good ones. Went through 2008, learned a lot, stayed in the industry. Always had aspirations to kind of go out on my own, but wasn't really sure how to do it. 2010, had an opportunity with a couple other people, which really reduced the risk. So we decided, okay, we're going to go with this. And, you know, they were family, kind of outnumbered, but it went really, really well for about 5 years. Learned a ton of stuff, but I spent almost all my time in operations, right? I'm kind of a systems guy. My, you know, DISC assessment is like no D, which means like not outgoing, not salesy, blah, blah, blah.
I have a very low D also.
Yeah, so I gotta learn that stuff. It's not normal for me. Even doing stuff like this is not normal for me. It's learned behavior.
Right.
But I know it's important, right? So we go through that 6.5 years, 5.5 of it, great. But we no longer were on the same page for what the future of was, right? I always wanted to build people, culture, offices, production. I just wanted to build, right? I wasn't in it to just make money. And their focus was profit per loan. I didn't really like that. I felt like it made us non-competitive in the market. We were always going to get a certain subset of the borrowers, and it wasn't going to be completely inclusive, right? So I hadn't done a loan since 2010. This is March of 2016. I didn't know any realtors. I didn't really even know if anybody would come with me. So I just gave it to God and said, I'm going. And I came home and I told my wife, and she was like, well, if you're miserable, we got to do it immediately. So that Monday I put in my notice, and in this industry that means you quit,
That
basically.
day.
Yeah, a lot of sensitive information, so you can't stick around. So anyway, I leave. Within a week, I'm in a new space, new company, new roadmap. I'd also wanted a coach that whole 6 years, and they didn't want that expense, which I think is not an expense, it's an investment, obviously. So I hired a coach immediately. First year we had 5 or 6 people come in. We did about 32 million in loans, which I was very excited about. Second year we doubled our staff. We did 75 million. Third year we did 102. Second year we did 220, which we had added a large group. Then we did 330, and last year we were just under 500 million. And it all comes from when I walked out of the door, one of those 2 people looked at me and said, "You don't have any realtors, you've never done a loan, good luck." And I said, "Well, I appreciate that."
And that was your motivation to
Yeah.
do better, to work harder, and
Anytime I feel like I could probably let up for just a second,
yeah,
because I could let the competition, like, you know, I can take it easy this day. That comes into my head, and it'll never happen, ever. The original motivation was I walked down the day before I quit. I walked down the halls, and I was saying hi to everyone. I was the only one of the 3 that was social to our own group, which is crazy to me. And every one of them looked miserable. And so I got my coffee, I went back into the office, I said, "Guys, you know, everybody in there looks miserable." And they didn't care. Not that they didn't care, but it wasn't, maybe they cared, but it wasn't extremely obvious to them that we needed to enact change immediately. And that was it for me. Like, in that moment, I was like, I won't do that. I will never do that. We don't have to do, I don't care how many loans we do, everyone's gonna love working here. You know what I mean? They come first. There's been times where I don't take a check because it makes sense. You know, it doesn't matter. It's not about that. What it's about is building something that, you know, you would be proud of, the people that work here would be proud of. Like, I want them to be like, "I love where I work." I want them to say, "Well, I wouldn't want to work anywhere else." And as long as I do, when I talked earlier about moving back, and if you can just look at 1 or 2 things and you know everything else is rolling well, if the people that work here with me, not for me, there's a difference. If the people that work here with me are telling people they love working here, we did our job. 100%. We did our job. So that plus, you know, we're very feverish about working inside of our community. Those are things that
So with my brokerage, you know, we love to give, we love to help, we love to help out our community. It's something that is dear to me. It's you know, whatever our church needs, whatever our school needs, you know,
community,
whatever our community needs, I'm most likely going to be the first one. I don't need praise. I don't need recognition. You do not have to put my name anywhere. I do it because that I enjoy it, and I can. We've been very, very blessed, and that's, I just want to give back.
So one of the things that we say is we win humbly and we give quietly. Right?
Absolutely.
So, you know, it even says in the Bible, if you give for the reward of people noticing, that's your reward.
Yeah.
But if you give for the correct reason, your reward comes later, right? I don't need anyone to know.
I don't need anyone
what we're
to
giving. I just need to know that I'm doing it.
Absolutely.
Right? If I give someone money and they do the wrong thing with it, that's for them to be judged by. I did what I was supposed to.
Absolutely.
Right? And I think people get hung up on that. But giving is one of the most fulfilling things in the world. And every year, my number one goal isn't volume, it isn't loans, it isn't growth, it's giving.
How much are we giving this year?
If we give more, everything else is taken care of.
Absolutely.
So we try to do that, you know, win humbly, give quietly. We do a lot of things, none of which we're going to announce or say any of those things. But what I would encourage people is if you really want to build a business that has roots plug into your community.
Mm-hmm.
Because if you're not plugged into your community, it's just it's shallow to me. It's surface level.
Mm-hmm.
It's not deep. You're not making roots with the people that support your business, right?
Absolutely.
You wouldn't have the business you have if it wasn't for the community around you. Why aren't you investing?
I remember there's new agents come to me all the time, and one of the things I tell them, they're like, how did you get to where you are today? And I said, I just go out and I talk to people, and my kids were involved in in every sport, through junior high and high school and club balls and whatever. It's about talking to people. It's about making the relationship. It doesn't matter how many advertising dollars you spend or how many leads you buy from third-party companies. That doesn't have anything to do with it. It's all about the relationship that you make with that person that you're talking to at the moment. So if you're sitting with me and we're sitting at the baseball field or softball field or volleyball court or wherever we were, I'm going to have a conversation with you, but I'm going to get to know who you are, and I'm going to get to know who your family is, and then eventually you're going to come and ask me about real estate.
Sure.
Who do you know in the mortgage industry? Who do you know? Can you help me buy or sell this house? Who are your inspectors? Who are your your insurance companies? Who are all your people? Well, you're one of my people. That's why I think we have a great working relationship. And you, and I know you remember this because we talk about it often, but what was it, 4 years ago, I came to you, I don't even know why I came up here. I was to pick something up or whatever. And you're like, how's your day? And I was just like, blah, no, it's not great. And you're like, hold on a second. You went and shut the door. We sat down, we had a conversation. And at that moment, I knew what I needed to do for my brokerage. Mm-hmm. We needed to make some tough decisions, and just talking to you for that 10 minutes, gave me enough strength and confidence to go, okay, you know what? It's okay. I can do this. Yeah.
Yeah. I'll never forget that moment.
Oh, I know.
And if anybody watches this that's in a similar situation, what I would say is, because I feel this myself too, leadership's a lonely place. Mm-hmm. We have less peers. We have even fewer peers that are willing to engage in real conversations mm-hmm. around the things that struggle. We all want the same thing, which is the absolute best for our people. Absolutely. And if we feel like we're not delivering that, it's the hardest conversation to have, and it's a lonely place to be. You're alone with your thoughts, you're alone with your doubts, you're your own worst enemy, you're always your worst critic, mm-hmm. right? Especially when you love and care about your people, and you need people. Leaders need other leaders that they can talk to.
Absolutely.
I joke, my mom thinks I hung the moon. But if I called her and told her I'm really struggling with something, it's not the same. Mm-hmm. She's going to give me praise and she believes in me if I'm doing the complete wrong thing.
Right.
Right? But having another person that's in a similar circumstance that you can be vulnerable with, that is responsible for a group of people and their well-being, with the amount of people that we have in our organization, that's a heavy weight that we bear, right? And any time it's not going well, you feel like the pressure's on you to fix it. So you need other people to talk to. And I think over the next 12 to 18 months, we all are going to need people.
Oh, I believe that. And my personal belief is we have over 40,000 realtors within the Houston Association of Realtors. I don't even remember the number of brokerages that we have, but it's a lot. So you and I, or me and another broker, sharing an idea or sharing, thoughts or struggles or whatever it may be, doesn't necessarily mean that we have to be competitors all of the time. You know, we can work and bounce things off of each other and cohesively work together to potentially grow each other. It's not always about, oh, I can't tell you that. I can't tell that's a secret. But why is it a secret? Why do we have to have all the secrets?
No, I agree. And I think where it comes from is certain people, no matter their level of success, in the back of their mind, they still operate from that scarcity mindset instead of abundance. To me, if I come up with a solution for a problem inside of this market, which I think temporary buy downs is one, I'm going to give it to everybody because I know that will pay dividends to me at some point, right? Doesn't matter if I don't get all those transactions. If I can solve the problems, then people know that, hey, Steve's got answers, right? Like we can go to him. Next time something goes crazy, what's going to be his idea? You know, I'm going to get on the video and on the Zoom call and figure out what's his solution. Because in the last 12 months, I've had 2 opportunities to do that. Just since January, really. You know, we have these rising rates. Here's 5 solutions. Now we've got this, you know, buyer frustration inventory thing with potential reductions. Here's some solutions. As long as you have the solutions, give them away. Don't hold them. Give them away. It will come back to you. Because the loan officers at those other companies that weren't told by their C-level, you know, executives or managers about these solutions, and then they hear them through the grapevine and it's us, they're going to be interested in working here. And if they're the right culture fit, we will let them. And the realtors that are like, hey, this place has it. I don't care if you're loyal and you don't use me and you get those loans done, you still remembered who it came from.
Right.
Give it away. It's not like you can do all the transactions anyway. No one can.
No one can.
So if you hold it like this, all you're doing is stopping the problem from being solved. You can't solve it yourself. No one person can solve it yourself. 40,000 people. Do we even have 40,000 listings? No.
No.
You can't solve the problem with one person. So you got to give it away. That's what I think.
I agree. I don't mind sharing.
No, me neither.
I mean, I'm an open book. I mean, everybody that knows me, that knows that I'm an open book. If you want to ask me a question, then you ask me a question, and I'm going to tell you.
Yeah.
Whether you're with my brokerage, you're with another brokerage, or you're not even in the area. You know, if you have a question, I'll be more than happy to help you.
So, as a leader, I feel like it's our responsibility to help people, whether they directly can benefit us or not. Period. So if that means it's a realtor or a loan officer that doesn't work with our group, if they need help and they ask me a question, I'm going to help them. Yep. Period. Because I wouldn't be doing my job as a leader in this industry if I don't help them. Because a real leader doesn't care about the brands. They care about actually building and helping people succeed.
It's about building the relationships.
100%. 100%. I have constructive conversations with people that do not work at this company. They may never work at this company, but we're friends. We do the same thing. We talk about solutions. We talk about ideas. And those relationships are going to be strong for years and years to come because we're not threatened by each other. And as long as you don't feel threatened by your competition, it opens up the ability to collaborate. And I think collaboration is the key to success, because you and I sitting here together can come up with ideas a lot faster than either one of us by ourselves.
Oh, absolutely. I agree with that. Yes. Yes.
I appreciate you coming, and I know that it's always a pleasure anytime we get to talk. It's interesting. It's interesting for us to take some time to let other people see kind of what our conversations are like. Hopefully it will encourage more people to have conversations like this, and I hope that you would be willing to come back sometime in the future, because I always like talking to you.
Oh, absolutely. I love, our friendship has just grown over the last several years, and anytime you call me or one of the girls call me and say, hey, Steven's got an idea, and I'm like, I am on board. Let's go. Where are we meeting?
Yeah.
Because I love, your brain just works constantly about trying to find new things, figuring out whatever, and sitting and bouncing it off of each other. It's a great day.
Yeah, I think it's invaluable. It's not great for my sleep schedule that my brain works that way, but I do appreciate it when it comes to business. So thank you again.
Well, I appreciate you always including me.
Yeah, absolutely. All right. Well, you have a good day.
You too.